Hello everyone, in this video we're looking at CPI, which comes out Wednesday, April the 12th at 8:30 a.m. and that is our first inflation read for March since the PCE that we got for February, which came in with some pretty low numbers for us. So we'll see what's expected for the CPI coming up for the week and what that means for the markets going forward from where we find ourselves right now. So without further ado, let me bring this up. This is trading economics that we're looking at here, and the consensus that we have right now is for 0.2% month over month. Not bad. We'll see what that looks like on my spreadsheet, and then 0.4% month over month that we have for the core inflation rate. And, we'll also see what that looks like on the spreadsheet. And really, I think that this gets really interesting when we look at March's readings, especially for the year over year numbers. So we'll bring that up and we'll talk about that and see what it looks like also as we get into June. If we go to the Federal Reserve Bank of Cleveland and look at the nowcasting that they have and scroll down to the first table, you can see for March 2023 that for CPI, they're expecting to come in at 0.3%, and for core CPI coming in at 0.45%. And these April numbers that you see up above will be adjusted pretty much as soon as March's numbers come out, and that's significant. It is worth pointing out, these are the year over year numbers. If you want to take a look at those, 5.2 and 5.66, this 5.22. Pretty incredible, especially if we miss the downside and see the fours. That could be a very big rally point for the markets to see that. Now, when we go down here and look at the monthly, you can see this is going back to February, and you can see that we did miss. The nowcasting is not perfect. No matter what month that we go to, you can see that we have a miss on the actual results indicated by the red and the blue dots that we have. There we go. We'll go back one more month, and you can see it's not always perfect. As a matter of fact, they're not always to the downside either for the actual values. That's something to be aware of and something to point out. Now, when we look at the St. Louis Fed's charts, and this is the month-over-month values that we get, you can see we're holding these strong tops that we have that round to about 0.5% month-over-month, and with this bottom that seems to be trending upward here, and this being the CPI for all items, I should say, coming in at about 0.3, 0.4 should be about right in the area that we would region that we'd expect to find them. And if we go over to core, you can see that one has not settled as well. As a matter of fact, we come at 0.45. We come in right in the middle of this narrowing that we have across the tops and across the bottoms. So kind of making that case of higher for longer that Powell had said. So rather than looking at just the headlines, when we look at the CPI from last month, if we look at all items, you can see that came out as 0.4% month over month. As soon as you take out shelter, that drops down to 0.2. As soon as you drop out food and shelter, that drops down to 0.1. So when we scroll down a little bit to look at services, this is really where things can be seen a little bit better. We can see 0.5% month over month. As soon as you take out services, less rent or shelter, it drops down to 0.1% month over month. So as soon as we start to see those values moving, that could be a very positive thing for those prices. Honestly, I think that we see those happening, if not next month. I think that we see those happening by June's reports that come out in July. So I think that can be very significant for us. Now, all of this does impact what we get for the CME FedWatch tool, and what you can see as of the latest loading of this, you can see we have about 3/4 of a chance for a 25 basis point hike coming up for us in their May meeting. So this has only increased over time. So we had at first, there will be a credit crunch, there won't be a credit crunch. So if we go back 1 month, there was half a chance that there was going to be a 50 basis point hike, and about a 60%, or less than half, 60% chance that'd be 25 basis points, and then 50 was off the table, and we come down to 25 basis point hike or no hike, which was not previously there. And then as of a day ago, it was about 70-30, and now it's 75-25 is the approximate breakdown that we have when we look at the CME FedWatch tool. So getting that 25 basis point hike, I think, becomes more likely in light of not having any sort of credit crunch being anticipated coming through the banking sector. So that's something, if the credit crunch isn't there to assist tamping down inflation along with the Fed rate hikes, then the Fed rate hike has to go back to work, keep on raising rates. So we'll see if this is the only one that we get. Now, I do want to just point out, if we go all the way out to December of 2023, we drop all the way down to 425 to 450. So that would be pricing in about 3 rate cuts, or 325 basis point rate cuts, or one 75 base point rate cut, or a 50, 25, however we look at it, priced in by the end of the year. So we'll see if that does happen to take place. I have said several times now on my channel that I do expect that June's numbers are going to tell an incredibly different story as soon as we get to July, and that we're really going to start seeing differences. I think that the whole service side, especially where housing is concerned, that we start to see some of that pull back from the high numbers that we have if we don't see it sooner. I think by June, so July is when those numbers come out. For June's reports, I think we're going to start seeing, like I said, a different story with that. Now, I do want to share with you the spreadsheet that I have on this. So let's take a look. First of all, we'll go to the table view for this one, and this is available over at the Patreon. You can find that link for the Patreon down in the description. You get access to my Patreon exclusive videos and also access to my private Discord where you can communicate directly with me and my other community members. We'd absolutely love to have you over there. Now, moving on to this. So when we look at these numbers, what I have highlighted for you here in black, this 0.3% is what's expected month over month, and that drops us down to 5%. So from 6% month over month, year over year, down to 5% month over month. That 1% drop getting into March is going to be enormous. And if we look out as far as June's numbers, look at this. By June, we start to see this thing go under 3%. That's if, assuming we stayed at 0.3% month over month from March's numbers, April's numbers, May numbers, June's numbers, that land us down below 3%. Now it does start to tick upward after that, so we don't want to keep holding that value, but that is something incredible to watch and something incredible to look at, that we could start to see some really good news, at least in terms of inflation. Now recession's a different thing. That's a different beast entirely, but holding on to that 0.3% month over month on average really turns out by June some pretty incredible numbers compared to the 6% down to 5%, sharply down into the 4s, sharply down into the 3s, sharply down into the 2s. Like the next couple months, or this entire next quarter, could be exciting for us in terms of inflation. Now, with that aside, we do have to pay attention to Q1 earnings that are coming up on Friday. We hear from JP Morgan, BlackRock, Citigroup's in there, Wells Fargo, and hearing what they have to say about the state of the economy, in my opinion, is going to be a much bigger impact than what we get through inflation. So I think CPI is a big catalyst for us. I think it has a chance to be upward pressure for us on the markets this week, whether it's CPI or PPI. We're going to have to watch those come out. Now, the IMF also does have their world growth projections coming out. I think this week we're going to have to look and see if that does come out. It's currently at 2.9%. We'll see if they move that up or down, because that could also be pressure for the markets either way. Hopefully up to continue bullish momentum in the markets. So we'll have to see what they happen to say about that. So I do want to take just a quick look at the markets here. So let me switch up to my friend Moomoo. There we are. So if you're not familiar with the Moomoo app, it is the one that I use in my videos. Let's make that bigger for you guys to see on the screen. And we're going to go to QQQ. There we are. And you can see the path that we've been on recently with, whoa, my goodness, still not coordinated. So if you've seen me before, I'm not the smoothest guy in the world when it comes to this stuff. We are well above, looking at the Qs, which tracks the NASDAQ. So again, QQQ, you can see the Moomoo stamp in the background back there. By the way, you can find a link down in the description for Moomoo, just in case you're interested. I'll show you the details of that in just a moment. However, you can see the little bit of a sell-off that we've been on. I think this is the 31st of March that we were looking at, which is a Friday. And then through the week leading up to Easter time, we had a bit of a sell-off and closed a little bit down from where we opened. However, today was quite a day in the markets, and you can see we were down, I think, well over 1% at one point in time in the NASDAQ, and then we recovered throughout the day to close pretty much even from where we closed the previous day. So that was a pretty neat recovery, and you can see the path that we've been on, and you can see this orange line, which is the last price action that we have, the last close. This is something that's moving us pretty close to another area of resistance and just struggling a little bit to peek over that. So we'll see what the inflation numbers have to say. We can rally off the inflation information, the earnings reports and the forward guidance that we get from them. BlackRock is enormous, JP Morgan huge, Wells Fargo huge, Citi Citigroup, huge. So hearing from them, they can really impact the markets as well. So, and I believe a lot of them, if not all of them, are before the market opens. So Friday is going to be an incredible day to watch in the market. So hopefully we hear good things and it moves us up, because we can have very strong trading with good inflation news and also good news coming after the companies reporting earnings. That can be really, really big for us in the markets. We do have to be careful of them coming out and reporting something negative about the outlook that, well, that could honestly help us out on the inflation front, but it could also spell out further signs of recession. So we want to watch those. Now let's take a trip by the SPY real quick. So when we look at the SPY, it's a very similar chart to what we had in the Qs. It hasn't had the same upside that the Qs have had, and we've failed to break this previous high, unlike we did in the Qs. So that is the next mountain that we have to climb on the way up. Falling down from that, we do have some room down to the 50-day simple moving average that we have here, and we are still in sort of bullish territory in the short term, although if we zoom out, we can see that not only do we have to break this high, which will keep us on a very good uptrend, but then we have the next one to contend with, which isn't too much further. So breaking up above 4,200 in the S&P is also something that's going to be very critical for keeping the bullish momentum going. But fundamentals are going to trump technicals every time, and we really want to hear from those companies and the earnings that they have. So CPI inflation, we'll see what comes out for us, and I think that we're going to start seeing some good signs coming in soon throughout this next quarter. I think by the end of this quarter, when we see July's reports come out, I think inflation is going to be telling a much different story, especially where services are involved. Certainly by the end of 2023, as we start to hit sometimes when student loan repayments start, for example, that could be another time where we could start to see that pullback in the services sector for that, in service inflation could really start to pull back from the rampant inflation that we've seen as demand starts to pull back from that as well. All right, so that's what I have for you guys in this video. By the way, just one last thing that I really want you to check out. So if you like what you've seen from Moomoo, there is a link down in the description. You can click and sign up using my link that's down there. You get 15 free stocks, and there you'll also notice this $1,500 cash coupon. I'll get to that in just a moment, telling you how you could win up to $1,500 in your trading account. So let's go down first and tell you some of the easy stuff here. 5 free stocks just for depositing $100 or more, 15 free stocks just for depositing $1,000 or more, and you get access to their free premium courses. You can learn more about trading and how to be more influential with the way and more powerful at the way that you work to make money in the stock market. So also, this is the financial literacy U.S. paper trading competition. So this is not your money. You get $100,000 of virtual cash, and you can use the month of April to compete in that. And I believe that it's calculated weekly, and you get up to $1,500 cash coupon and 1 month of Bazinga Pro for free by winning that competition. And you can click my link and read out all about it. And why not take advantage of that opportunity? If for nothing else, the free stocks coming your way. You're supporting yourself. It supports this channel. So if you like my commentary and you'd like to help me out, I'd absolutely appreciate it. Don't forget about that link for the Patreon down in the description. Not only do you get access to Patreon exclusives, but you can also be part of the community in the Discord and interact with me and the other community members. We'd absolutely love to have you over there. Thank you guys very much for watching this video. Hit the thumbs up button if you like this video. Hit the subscribe button to see more of my content, and ring that notification bell to be notified anytime that my content comes out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.